and welcome to today's episode of the Property Pod. Today I'm joined by Richard from Grange Business Finance. Welcome to the podcast. Thanks for coming on.
Thanks for having me, Libby.
And today we're going to speak about business loans and all that sort of stuff for business. So tell me a bit about Grange Business Finance.
Grange Business Finance is a commercial finance brokerage based in Ipswich. We're a husband and wife team as it stands. And we've been trading since August 2020.
And what different types of loans are available?
There are so many different types of business loans, but sort of notoriously on the loan side, there's the unsecured business loans and there's the secured business loans. So the difference between those two are security on the secured facilities, whereby you'll put a charge onto a house or some type of equipment, and the unsecured is covered by a personal guarantee.
Okay, great. And what other options are available to fund a business?
Other than business loans, there's lots of different products, and we get asked about this a lot. So there are products such as asset finance, where you're going to fund vehicles, plant, machinery, equipment. There's also invoice finance, where you can bring forward your payment terms so you can access your cash against unpaid invoices earlier. There's property finance, there's bridging, there's commercial mortgages, there's development finance. There's all sorts of different types.
And how does a business owner know if they're eligible to apply for a business loan?
Really good question. There's lots of different sets of criteria depending on the lenders. So we have access to around about 100 lenders, and there's probably a couple of hundred lenders out in the market. And to be honest, there's usually a lender for everyone. So eligibility is a really good question. If you were going directly to a bank, you would need A1 credit. You would need to have good assets behind your business and a good trading history. Whereas if you use a business finance brokerage, you might be able to operate at some of the more expensive end of the market, where you don't need as much trading history, and then somewhere in between as well.
Okay, great. And how long do you have to be in business for so you can qualify for a business loan?
Another really good question. So we say a minimum of 3 months, and that works really well on a merchant cash advance, where you can borrow against your card machine if you're in retail. If you're looking for a business loan, you're probably looking at a minimum trading period of 6 months. But we want to see kind of progression from the business, showing a higher turnover, higher profitability. And again, the longer you have been in business, and the more you can demonstrate that track record, the more likely you are to operate at some of the sort of cheaper end for interest rates.
Kind of like a credit score, I guess, in a way, just showing that you've got like the stability and the security and you can afford to make payments.
Exactly that. And there's a common sort of stat of most businesses fail within the first 12 months. If you then get through that, there's an even higher percentage of those ones that then fail at the next hurdle. So a business lender really wants to see your track record, lend against it, and gain comfort, because ultimately all they want to do is lend you money and get the money back. That's the main aim.
And how does a business owner know what type of business loan is right for them?
We've had this recently, actually, whereby a business owner came to us and they were looking at business loans when they were looking to purchase a piece of equipment or machinery. And we actually took them down the asset finance route away from the business loan and saved them half of the interest. So instead of it being sort of 8 or 9% per annum, it went down to 4.6% per annum. So a big change. But yeah, there's lots of different types dependent on what your plan is with the money. So if you need cash flow for expansion, you would go and get a business loan. If you're going to buy equipment and machinery, you'd use asset finance.
Oh, interesting. There's like two different types there, and very different interest rates and implications for the business. Yeah,
exactly that. And I think most business owners won't necessarily know that the two exist. So actually, sometimes using a finance broker, you can then get access to both and compare both as well. So that's what we try to do, is provide options, let them see what is the best option, and then they can choose from there.
Great. And how can a company apply for a business loan?
Most companies go to their bank, first port of call. However, a bank is lending money that you and I have provided them, so actually their risk appetite is really low, and depending on how long you've been trading for and what your financials are, they may not want to lend. So after your bank says no, where do you go? And that's kind of where we come in. It's a good opportunity for us to then sort of explore the market and start at the cheaper end, and we just go through a process of elimination. So I class it as a game of guess who, almost, and we start to flick them down, and then we end up with 2 or 3 lenders that we then hone in on.
Okay, yeah, that sounds really good. And do you need a good credit score to be able to apply for a business loan?
Yes. However, there are alternative lenders. So again, you'd go to your bank first port of call. They would want to see a clean credit report. Some of the next lenders that you go to, they will want to see a clean credit report. However, there are some lenders that will lend if you've got a CCJ, for example. However, sometimes that's reflected in the rate and the term, so it'll be a shorter term and a higher interest rate. And again, they can vary up to some really high numbers.
And how much interest does a business owner pay?
This varies completely. So we have organised asset finance at 4% per annum, same with business loans, but we've also gone into double digits for business loans. Not with asset finance. That tends to be at a lower end of the market because there is something tangible and there is security to take back. So if you default on an asset, the lender will just take back that vehicle and go and sell it. Whereas with a business loan with a personal guarantee, there's no way of them actually obtaining that money back.
Okay. And what is the best way, do you think, to repay a business loan?
I would always say repay it early.
Yeah.
Especially if there are no early repayment charges. There are some facilities where the full interest is due anyway. So we would say, keep paying it on a regular basis. But ultimately, if you can get out of the contract early and not pay the interest, clear it early.
Mm-hmm. And how long does it take, do you think, to repay a business loan?
It varies. Normally, the lender will dictate how long the term will be. So you can have anything from a 3-month term up to a 10-year term. So lots of different variations. But the one that we tend to see is kind of around about the 2 to 5 year mark, especially on the unsecured business loans.
And does it make a difference with the 2 years? Like, what sort of factors are implicated in that? Like, is it sort of 2 years because it's a smaller business or like a bigger business, or is there anything?
Yeah, there are some. So there's a lot of lenders that won't lend for a longer period of time than what a business has been trading for. So if you've only been trading for 12 months, you're unlikely to get a 24-month term. You're likely to get a 12-month term. So good question.
Oh, good. Great. Well, thanks so much for coming on. It's been great to have you here. Thank you
for having me. I really appreciate
Brilliant.
it. Thank you.
And for all you guys at home, if you did enjoy this episode, please don't forget to like, share and subscribe, and we'll see you next week.